Hi, everybody. I'm just writing down who's here on the call. It's great to see everybody. Hi, Ashley.
Hi,
Mary.
how are you?
Good. How are you?
Good. I'm up in Reading right now. It's like 105. Oh, I think it's hotter than that actually.
Uh,
But I think it was like 108 yesterday. I don't know. It's just hotter than hell.
well, we're getting some nice smoke. So
Ooh,
From where?
the is it the oak fire? Where's the fire coming from there?
Mariposa.
The Mariposa?
oh, it's been a little bit hazy here, so that must be why.
Yeah. Okay, let me see. I think I've got everyone. Oh, I don't have Peter.
I'm here.
Hi, Peter. Hi, hi. Welcome. Well, you all have the agenda and you have the documents that we're going to be reviewing today. And just for everybody else that's on the call, we are, that you may or may not have seen the agenda, we had planned to have some introductions just to welcome the new members and review the Finance Committee Charter, standards and practices. And then we have invited Jim from First Service to review the financial documentation and just kind of how to read it and so forth. So, oh, actually, maybe is it Andy that's going to? No, Andy,
No, it'll be Jen.
you're the, yeah. Hi, Andy. Is Jim here?
I'm here.
Yes.
Oh, there you are. Okay. I don't have Jim down. All right. Okay, so welcome everybody. It's great to see you. Oh, and Karen. Everybody keeps popping up. Hi, Karen. I thought we would just go through some introductions of the committee members and liaison and just kind of find out who we all are and get to know each other a teeny bit, not too much, because we have a full packed agenda. So I'll start out. I'm Susan Timmer, and I was appointed chair of this committee for this year. And I've been on the finance committee, I think 7 years, but Betsy, you can correct me if I'm wrong.
That sounds right.
And there are a lot of people on the committee that know more about finances and auditing than I do. But as you will all learn kind of in the process of being a part of this committee, that half of it is just remembering what we did before and what the issues were and how we can save money doing the things that we do to keep up this wonderful community that we live in. And I'd like for everybody just to talk about kind of what their reasoning or what their main kind of reason is for being on the finance committee. I can tell you that mine is, and I said this sort of off the cuff last time, but it's really true that I am on the finance committee to try and help do my best to see where there are ways that we can save money to keep my HOA dues less than my mortgage payment. That's my main goal. And so I'd like to just kind of pop it over to the next person next to me on the screen, which is Tara Zimmerman.
Hi. So I've been a homeowner since 2016. I'm probably, my background is accounting and finance. So I have a CPA, I'm a certified internal auditor. I've worked in both public accounting as well as doing internal audit. I also do financial planning and analysis, management consulting. Right now I'm a jack of all trades in the dean's office at the UC Davis School of Medicine. My interest in this was just coming from Serrano. came to this this area, and the HOAs, I was like, what is X? Why is this so high? Very different level of expectation and service between Serrano and Nepenthe. So I just wanted to dive in, understand, and then this beautiful thing of reserves. And to Susan's case, my God, if it goes higher than my mortgage payment, then I have a real big problem since I bought in 2016. But so I've been on the committee, I think, for 2 years now. And that's my background.
Thanks, Tara. Will, you're next.
Okay, I been in Nepenthe since 1997. Spent 8 years on the board. Before I was on the board, I was on finance. And I was an interim. When I was off the board, I was on finance, and now I'm back on finance. So I've been involved in this for about 20 years, I guess. Or 21 or 22, I don't know. And my primary focus is just on the board and here is to maintain the fiscal viability of Nepenthe. I mean, HOA can easily fall into a trap of underfunding, and that turns into a spiral. So to avoid that.
Thanks, Will. Aubrey?
Yeah, hello, I'm Aubrey. I've been a homeowner for 8 years now in Nepenthe, and I think this is my 4th year on the finance committee. And I'm a small business owner. I worked for the state in contract management and compliance for several years, and then started a small consulting firm 5 years ago. And my role, I'm the chief operating officer. And so I have an expertise in keeping things running and getting all the things in all the right places. And that's what I enjoy bringing to HOA, our HOA as a volunteer, and supporting the finance committee to really support our HOA to be efficient and effective as we continue our, what are we at, 50 years? I don't know, going forward.
Right. Thanks, Aubrey. Mary?
Hi, I'm Mary Gray. I've lived here for 11 in Nepenthe, not where I am, for 11 years. And was on the board for a couple. And during the time I was on the board, I really didn't get much background or information on the finances. And so I thought I would join the finance committee to learn more. And I have a similar goal. It has nothing to do with mortgage, but just keeping the dues as low as possible. So looking forward to working with all of you.
Thanks, Mary. Peter?
Yes, I am an attorney. As most of you may know, my background with regard to anything financial would be that I have spent about 13 years as a deputy state controller in the controller's office. However, most of what I did dealt with legal matters rather than accounting or auditing or anything of that nature. I did have the pleasure, if you want to call it that, of being the controller's deputy on the public, on PERS, on the Teachers Retirement Board, on various other boards and commissions that dealt with bonding and things of that nature. So I have some general knowledge of finance. I really requested to be on this committee. I came off of ILS, and while I was there, discovered some things that I thought were not working the way they should be, and thought maybe they could be corrected by some efforts by this committee. And so I'm here to see what I can do in that regard and to work with all of you.
Thanks, Peter. Ashley, would you like to introduce yourself?
Hi, my name's Ashley and I'm the board liaison. I can talk more to it in a little bit. I did a quick few-minute presentation that I'd like to show you guys, but basically I have a very strong accounting and finance background. I worked for the state as a budget analyst. I did a lot of special projects and forensic accounting at the state, and I was also a tax auditor in business taxes. I also worked on a lot of projects for business process improvements. And I think we've got a great skill set and of people here. And anyway, I'm looking forward to taking it a step further, maybe. I don't know, but great work from before. And I'm looking forward to working with all of you.
Thanks, Ashley. And Jackie?
Sorry, I had to unmute because my cat's being noisy. I'm Jackie Grabitas. I've lived here for 21 years. I worked in the insurance claims industry for 40 plus years. And all of my time in claims was as a fiduciary, being responsible for other people's money, explaining to them why I spent their money. I worked with a lot of self-insured clients like the University of California, ARCO, British Petroleum, and those kind of companies that always wanted to know where their money went. So I handled claims, I managed people that handled claims, and I audited high dollar claims. So I got a lot of interest in finances and watching where the money goes and how it's being justified just based on the nature of what I did in my career. That's it.
Thanks, Jackie. And did you mention you were the treasurer?
Oh, yes, I am. That too. There is that. Sorry. I forgot why I was here.
Well, thank you. Thank you. And welcome everybody. I think we have a strong team too. And looking forward to working with everybody. I just want to make sure that everybody saw the Finance Committee charter and just one little housekeeping thing before we go forward. Can you make sure if you are a homeowner that you have yourself on mute, as sometimes we can hear what's going on in the background. Thank you. So I'd like to review the charter, and I don't want to kind of go through it item by item because I did send these out before. But that I'd just like to make sure that everybody on the committee reviewed and understood the standards and practices for our committee at the very least. Although I think that the document talking about standards and practices for all committees is really great too. And has reviewed the Finance Committee charter. Does anybody have any questions about these documents that guide our work and kind of mission? I mean, you can see the thing that I really want to point out is that our goal is really to provide advice to the board. We don't have any power on our own. We operate as a resource for them. If they want us to take a look at contracts, we will do that for them, but there's no expectation that the board pass all the contracts that they enter into by us. We have as our key responsibility to review the monthly financial statements and bring up issues that may be of concern. I think that under issues, we can put good things too. For example, really thanks to Will Vizard, we identified an area where the HOA could potentially save money in the future by switching our siding material from a T11 111 plywood to a composite board. And I mean, things like that kind of come up and kind of make an appearance of this is a way that we can save money and we can do something positive for the HOA, and we will bring that up to the board. But the decision about whether to follow suggestions that we make resides entirely in the board. Our board liaison is a person that brings to us concerns, assignments that the board has. And the board kind of operates possibly in executive session, possibly not, to bring up issues. And then those issues are communicated to our liaison, and the liaison brings those up to us and updates us on kind of thinking and priorities, current thinking and priorities of the board. So I just want to make sure that everybody understands that, because it's a little bit, how can I say that? It's, I don't want you to enter into this work thinking that you're going to tell them what to do, because everything that we phrase is, we make a recommendation to the board that they consider X, Y, or Z. And we really operate largely through the board liaison to make opinions and thoughts known, in addition to the minutes that we write. Any questions, thoughts? Then I would like to invite Jim to share your slides, or however you're going to present the information that you're going to present to talk to us about financial documents.
There we go. All right. Well, thank you everybody for inviting me here. I am Jim Donovan, Regional Controller with First Service. I've been with First Service going back to 2016. I think I've attended a couple of your Finance Committee meetings in the past here. And what I'll do today is I'll go through the financials. I know time is a little bit short, so I will kind of do a high-level view of the financial reports and kind of what information those reports are good for getting. And then if you guys have questions as I go through it, feel free to ask those, and I can go through those as we go. I've got some questions on reserves that have been sent my way, so I'll touch on those. But other than that, I'll just kind of go through the overall financial packet and kind of the different reports that are in there, and then I'll go over the reserves, and then we can open it up to questions after that. But if you guys do have questions as we go through, feel free to ask those. Sometimes your questions are questions that other people have. So, all right, so what we'll start with are your financials for June. I think you guys can all see the screen here. There. All right. So we've got your June financials here. You guys are on a cash basis. So the cash basis financials basically mean that we're showing the money that comes in and the revenue comes in, and your expenses, not on an accrual basis, but on a cash basis. So anything that we are reporting for income is what was actually received by the association.
Can I ask, I'm sorry to interrupt, but I was reading where accrual is what most HOAs use, and I'm curious why we don't.
So this is something that is usually set up at the time of takeover. For the most part, I would say most of our accounts are modified accrual, where we do the income on an accrual basis and then the expenses on a cash basis. There is an additional charge for a full accrual financial, where we would go back, and back in, expenses that were for, June, that are paid in July. That'd be a full accrual financial, and that's more GAAP. So the financials that do go out to the association membership at the end of the year are done full accrual. So the year-end report that everybody sees from the association is a full accrual financial based off of GAAP. But your monthly financials are cash basis. That can be changed if the board wants to, and then we would just have to make that adjustment on our side of things as far as how the income's recorded.
At one time, we were on accrual, and going back probably maybe 12 years ago, at the board's request, we moved from accrual to cash, partially because the board was having problems knowing what the exact cash situation was. As opposed, on accrual, you're logging income that may or may not actually be received, and you're logging expenses when they're supposed to occur as to when they actually occur, et cetera. So the board made a decision at that time that it was easier for the board to understand our exact situation by staying with a cash accounting method.
Yeah, and I think that was probably around the time of the last housing crash. So around that time, there was a lot of associations that changed over to looking at their financials cash basis because there was such a large percentage of their income that wasn't actually coming into the association. So, and it sounds like probably about 12 years ago, that'd be about 2009, 2010. So
Yeah, it might have even predated that slightly, but it was some time ago.
Right. Yeah, so yeah, ultimately it's going to be up to the board as far as what they want to see and what makes the most sense to them when they're looking at their financials. So it's something that we can definitely change. We would just need direction from the board to do that.
Thank you.
Welcome. All right. So then we've got our cash flow report here. So this kind of gives you a breakdown of the cash in, cash out. Down here at the bottom, we've got unpaid assessments. Yeah, this kind of gives you kind of an overall view as far as how much money is coming into the association, how much money has come out. Below that, we've got our monthly financial summary here. This report is kind of good high level overview of basically kind of like the balance sheet, income statement, and your AR report kind of all combined into one report here. Probably one of the bigger things that this report is going to be useful for is going to be looking at your assessment receivable trending. So right now we can see it's kind of on a downward trajectory, which is always good. But this is going to be something that we'll probably want to keep an eye on as we move through the year, as far as if there's going to be an uptick in accounts receivable, if some people are starting to have problems, paying their mortgage and stuff like that. This is the report that you'll probably see some of those issues, start trend up, and that's going to be kind of a canary in a coal mine per se, as far as if there's issues as far as homeowners making payments. Overall, right now, based on the size of your association and the overall dues, you guys are in a really good position right now as far as accounts receivable. There's nothing here that's worrisome as of right now, but this is just something that we would probably want to keep an eye on overall.
Excuse me, Jim. Would you mind just making the font or zooming in a little bit? Just sorry to interrupt. Perfect, beautiful.
There we go. That's better. Yeah. So overall, your accounts receivable is looking good right now. But we'll just keep an eye on this to see if there's any kind of negative trend of increasing. But right now, yeah, you guys are in a really good position. Overall, your assessments receivable is not an issue right now. So that's an excellent place to be. So hopefully it continues on in that manner. Right. Next report is going to be our balance sheet. So this is going to be your assets, liabilities, and owner's equity. It sounds like for the most part, everybody here on this call is pretty well versed in the overall, financials and stuff like that. So I won't get too down into it. But if anybody has any questions, please let me know. On your balance sheet, one of the biggest things that you'll notice is going to be the accounts payable here. So what we're doing is we are accruing every month your insurance payment. You guys have a very large insurance payment that always goes out, I want to say around November of every year. So what we're doing is we are accruing for that so that it's not such a huge hit. So you guys are, so it's not fully cash basis accounting. Since this is such a huge amount that's paid out at the end of every year, we found that, recording that, and so it's not a huge, surprise at the end of the year is going to be the best way to kind of get a real gauge of where you're at financially. All right. Any questions on the balance sheet? All right. So our next report is going to be our investment report. So this gives you a breakdown of all of the different accounts that you have, the interest rates, and which banks the money is held in. So right now we've got quite a few different accounts here. Metropolitan Bank, that's going to be a money market sweep account. So some of these accounts you'll see that has more than the $250,000 in it. So the Metropolitan Bank's a sweep account. So those funds are spread out amongst multiple institutions. So whether you're over the $250,000 limit, those funds are split up under $250,000. So those stay fully insured. Overall, we can keep looking. Interest rates are continuing to go up. It looks like they might, raise it 3/4 to a full percentage point here. So, so we'll keep looking at your overall interest rates. And if there are opportunities to earn more income through higher interest rates, we can always bring those options to the board for review and possibly being able to get you guys some more money.
So Jim, who picks where our money goes? Is there an investment counselor, or who makes the choice?
So through First Service, we have a program, FFI, and what they do is they work with banks across the country. And what we do is we leverage the size of First Service and the large amounts of deposits that we have to get higher than market interest rates for associations. So what we will usually do is reach out to our FFI team. They'll do a review of all of your investments. They'll take a look at what's currently available, and then we'll send a proposal to the board for review and discussion. So then the board can kind of discuss and decide, they want to, move this way or they want to move that way. We can have options with, all money markets, CDs, a mix of the two. So basically it's kind of up to the board as far as, approving the overall investments. And we can, First Service as a company, can provide the different options that the board can have for those.
Jim, I have
Yes.
a quick question. Are all the other HOAs, I'm not hearing of bank runs these days. The 250,000 limit, is that what all of the other HOAs are doing, or?
Yeah, so that's more or less that's just for protection of the HOA. You're absolutely right. There's not bank runs, and quite honestly, even back in 2008, 2009, when there were some banks that became insolvent, nobody actually lost any of their money. Other banks purchased the assets and stuff like that, and nobody was really out the funds. But just from an overall protection of the principal, we generally recommend to try to keep the balances under that $250,000 limit. The US bank accounts are fully insured. So if you have $1 million in the US bank account, First Service has a depository bond on top of the regular just FDIC insurance, so that it stays fully insured. So, so at any time, US bank accounts, the combined balance of those, if those over 250,000, there's secondary insurance to cover those. So, overall, what we're doing is just trying to protect the principal, in the worst case scenario here. So that's kind of why we look at and try to keep everything under that $250,000 limit, just in case.
Jim, are we eligible to buy I bonds? Is the association?
Oh, what kind of bonds?
I bonds are only limited to $10,000.
I know. Yeah,
Yeah,
I
it would
realize.
be, we can, from what I understand, I'm pretty sure that we can.
My
I think we can too. It's only 10,000, but if you do 10,000 a year, the return is phenomenal compared to
Yeah.
everything else out there right now.
I know. I mean, I think we should, as a group, go back and revisit this 250,000. I don't know, something I'd like to see you guys look at.
Will, it's my understanding that the I bonds are only available to individual investors.
Yeah, I'm not sure.
Entities can buy them. I bought one for my parents' trust.
Yeah, you can buy them. A trust can buy them. I know. I don't know whether a nonprofit corporation can or not.
Right, I don't think they're available to us. Because I looked into them as a personal matter, and that's what I determined.
Yeah, we can definitely look at other investment options. Yeah, government securities, municipal securities, CDs, money markets are probably like the most popular. The associations should not get into like individual stock buying, just because you know, the possibility of losing your principal is there. So basically anything that where your principal is guaranteed is going to be a good, safe investment for the association. And anything that falls under those guidelines and, you know, gets a better interest rate, you know, always good for the association. So especially now that interest rates are going up and might be actually a meaningful amount. So so that we can definitely keep an eye on interest rates and provide you know, options to the board as far as additional investments. Because you guys do have a large amount of money going into reserves on a monthly basis as well. So, all right. Any questions on the investments right now? Right. All right. So the next report here is our reserve fund schedule. So I think this is going to be probably one of the reports that is going to be the most interest to you guys. You guys do have a very large amount of reserve expenses on a yearly basis, and probably one of the bigger ones that we've got overall. So this report, there was a couple questions on it, and let's see. So this report comes from your reserve study. And what we'll do is we will adjust. So right here, this beginning balance reallocation. So what this line is, and right now it's all zeros, but what we'll do for July is we'll do the reallocation. And what we're going to do is take this 10,000 or 10,402,000 balance. And what we'll do is we'll allocate this amongst the different line items from your reserve study. So when we're looking at your reserve study in there, there's a report that does a breakdown of what the fully funded balance would be and what your contributions to each of these line items is going to be on a yearly basis. And over here on the far left side is going to be the GL that these expenses or the components are going to be allocated to on the reserve study. So what we'll do is down here at the bottom, they've got the total. So this is going to be your fully funded balance for the year. You don't have necessarily that much money in your accounts. So what we'll do is do a percentage based off of this 13,917,205. And what we'll do is basically take this 13,917,205 and divide that by your 10 million here. And then we'll have a percentage of that. And then we'll allocate the percentage based off of the beginning balance reallocation, so that if we go all the way over here to the far right side, our current balance here will be reallocated. So like right now we've got the 7 million in general reserves. So what we'll do is we'll allocate that 7 million out amongst all of these other accounts so that our current balance will line up with what we've got shown here on the reserves for the fully funded balance here. So basically what we'll do is we'll do a percentage of the fully funded balance based off of your current cash balance compared to the current fully funded balance. And then that'll give you a better idea of kind of where you're at for the year. And we'll also do a breakdown for the reserve funding. So I think right now it's like general reserves that we've got the funding allocated to for the most part. So what we'll do is we'll break it down into all of these specific line items. So we're showing the portion of this line item contribution on a monthly basis here. So you'll have a better idea kind of where you're at year to date. Yes, Ashley.
Tim, are you familiar with the fund tracker?
Yes.
The reserve track.
Yeah, the reserve tracker, excuse me. So when I go over there, what's really confusing to me is, well, I mean, they don't really quite line up with the Browning and then the fund, then what you've got in your financials that you just showed. I mean, I can line them up, but it's not perfectly, but I still can't account for, you know, let's say landscaping has -800, and then I go over to the reserve, the fund reserve tracker, and it looks like there's a lot more money in it. And when I look at the Browning study, I would think that that 10 million that we've got in reserves would be allocated proportionately amongst the different reserve items in the Browning study, and it's not. And so when I analyzed it, I was showing some categories we were at 38, others 24. So to me, it looked like that was setting that they just applied a 75% off of the fully funded, or that they were playing around a little bit with that 75% ratio. And I just think it doesn't give us a clear picture. And then a lot of our operating things that I think should be operating expenses, and per Davis Sterling, our operating expenses like tree trimming are coming out of our reserves. And I don't think that that should be a reserve item. So I have kind of two questions, excuse me. So, you know, why are they allocated not proportionate to the Browning report? And then, you know, secondly, I mean, I think the other issue is just, I mean, it just gives us a picture that makes it look like we have more money in some categories than I think we really have.
Yes, yeah. So actually, right before this meeting, Betsy had sent me an updated report. I believe that she was accidentally using the 2021 allocations and not the 2022 allocations. So so we've got an updated tracker that I think should.
Well, that's just the allocations. I'm talking about the beginning balances are way different than what you have in your financials.
Oh, okay. So yeah, so the beginning balances.
So why do I have a positive balance over here? I mean, I understand they're just way off.
Right. Yeah. So these beginning balances, yeah, because we've got like, yeah, the negative, you know, 800,000 here for those. And so what we'll do with this beginning balance reallocation is that will fix these balances here. So we won't have the, you know, the negative 800,000s here. What we'll do is we'll allocate funds to those line items so that when we're looking over here on the far right side, we shouldn't have negatives over there. And if we do have any negatives over there after we do the beginning balance reallocation, that would, you know, signify that, you know, that account's been overspent for the year. And it might be after we do the reallocation, I'd be happy to jump on you guys' next finance committee call and kind of go over the adjustments to the reserve fund schedule here, because it's going to be pretty substantial overall as far as the beginning balance reallocations go, and some of the adjustments to the funding. So what we'll also do is we'll adjust this additions this year to match up to the Browning Reserve Group and that report. So I think after we do all of those adjustments to this schedule, we should have parity between this schedule, the reserve tracker, and the Browning Reserve Group. schedules so that everything does tie together.
Yeah, well, I mean, it makes it look like we have way too much money in areas. Like I just shared my screen here. And if I were to take the the reserve tracker and then look at the actual reserves, you see all these negative differences, which I get. They're taking money out of the general reserves and the reserve interests and kind of spreading it out. But when I look at the way they're setting the reserves, it magically works out to be at 75% in most cases. But really, we're borrowing from some of those reserve items that, we're at 57% over here. We're at structural repairs. It puts us at 38% funded. We're at 34% mechanical equipment. So I don't feel like that's a worthy tool for us to look at. It also doesn't account for committed expenditures. When I look at, I found a few
Ashley,
okay, sorry.
I'm just thinking, I'm just mindful of the amount of time that we have left, but
Yeah.
I wonder if it wouldn't be more beneficial to have this conversation once we see those reallocations. And then we'll just have a better sense of where things are and you'll be able to sort of judge, it won't be so serious. What do you think?
Well, that's fine, but I just want to make a comment that the board approved several items back in March. They didn't become, even though the work was completed, they didn't become a work order till June. And then we still haven't gotten the invoices for them. So that's 200,000 that hasn't hit our books yet. I feel like we need a column for the reserve tracker that, at least tracks those bigger committed items.
And I just want to make a comment about that, Ashley, and then let's move on. And just to let you know that's been a problem for us for a while.
Oh,
and
okay.
we're trying to figure out the best way to be able to understand that kind of relationship between what's allocated and then what's being accrued. So I think we need further discussion on that too.
Oh, okay.
But
all right, good. Thanks.
So I have a concern about that too, because I don't feel like if you have huge outstanding, essentially debts due, then the numbers, people can go on spending without accurately realizing that they don't have the money. So it seems like Ashley's point on having a column is a really valid one.
And I totally agree, Mary. I think we have to do a better job of understanding that. I think in the past, we assumed that the board was keeping track of their allocations. And, I think that you'll both be able to shed some light on that better too. So
Okay,
but
thanks.
I'd like to kind of put a pin in that and talk about that next.
No problem.
Yeah, I'm thinking maybe we could add in like a pending line item. To kind of capture some of those that are outstanding, because $200,000 would be, pretty material overall. So
yeah, I mean, if we're going to spend that money and it's completed, I'd like it, I'd like it invoiced and paid within 30 days if we're going to keep this kind of accounting system.
Well, let's talk about that later.
Yeah, we'll talk about it.
There we go.
Thanks.
That's a whole nother thing.
Yeah.
Okay. Thank you.
But no, we can definitely look at making some adjustments to the tracker to add in like a pending expense line item. So once things are approved, we could have those, entered in as pending, and then, as those are paid, they'll shift from pending over to date expense. But at least it would capture those items that are outstanding that may not be visible from a financial standpoint until they're paid yet. So
just one last thing, I was told the fund tracker, or I keep calling it fund tracker, reserve tracker, was proprietary to First Service. And I find that hard to understand when it's just an Excel spreadsheet. And I just think these kind of manual types of accounting things, as an auditor, when I audited, they're just prone to error. They just are. Transposition error. I have full faith in your operating expenses that those are done correctly, but this is just one of those things that I feel like needs another set of eyes on it.
Yeah, and this spreadsheet is actually something I put together a few years ago to better kind of track it, because you guys do have so many reserve expenses. But yeah, I don't think there's anything necessarily proprietary about it.
Well, it wasn't given to me, so.
Okay, yeah, I don't think there's, yeah, I don't
we
necessarily
think-
think there's any reason not.
Well, the underlying Excel file, so I can go through and check, where those numbers are from,
That sounds like it'd be helpful.
Yeah, I can talk. Yeah, I can talk with Betsy. Yeah, maybe I'll do a little bit of work to include a pending line item on it, and then we can share that with the board and finance committee. I think once we get everything tied out to the Browning Reserve Group
Okay.
reports and a reserve fund schedule, it might be worth just another meeting once we do have all that done. Just kind of go
Yeah.
over everything and
I agree.
take a look and see how everything kind of foots out. So. But definitely be glad to schedule another call to go over that once we get that all worked out. But for right now, so we'll work on the reserves and getting that all cleaned up. So I'll go over some of the other reports that we've got here in your financial packet, and then we can open it up to questions. All right, so we got the reserves here. The next report we'll take a look at is going to be your income statement. Like I said before, we're on a cash basis. So the income that we're showing is going to be your income actually received. Something that's kind of odd to note would be reserve interest revenue is negative for the month. That reflects a decrease in value of the government securities held in your Morgan Stanley account. Just based off of market conditions, you'll see those go up, go down. But overall, from an overall interest standpoint, you guys are at 113,000. So you guys are doing pretty good there as far as your return goes. Going down through this, the insurance. So your insurance here. So we've got the your flood insurance. So this is going to be what we've got that's tied to the entry on your balance sheet for the flood insurance. So that'll get paid out, I think, November or December. And when that gets cleared out, to the actuals, we'll clear it off the balance sheet. Other than that, right now you guys are running at a bit of a deficit overall this year. Nothing too crazy. The gutter and downspout cleaning, that'll probably fix itself as far as the expenses go. One item that I did notice that we've got in operating is federal tax expense and franchise tax board expense. For the most part, your taxes are going to be based off of the reserve interest. So that's something that could be paid out of your reserve account, just kind of depending on the board's direction. We can have that move to reserves. Might help out the operating account a little bit. So one way that there's no right way or wrong way to do it. It's just kind of up to the board. You guys didn't budget for it this year, so it may be another $12,000 that you want in reserves rather than out of your operating account, but just something to discuss. Especially.
Jim, one last thing, just going back to, I didn't finish my thought correctly, but going back to the operating expenses, like paying for, like tree trimming and storm cleanup out of the reserves. I mean, that doesn't seem, that's like a daily living expense to me, not a reserve item. Do you think that's something that we need to shift up and budget for in our operating expenses?
Yeah, and I think so. I think historically, one of the reasons why you guys have paid for those items out of your reserves is, well, one, that they're very large expenses and that they're not necessarily consistent year over year. So, having it paid out of your reserves gives you a little bit more flexibility. If, 1 year the expenses are really high, the next year might be a little bit lower. Paying for it out of reserves kind of helps, overall keep it so you're not having a huge swing every year. But overall, tree trimming is generally something that is paid out of operating. You guys are kind of unique though in the overall amount of trees that you have. I would say you guys are definitely in the top 2 or 3% of associations with the number of trees that you guys have. It's
Or dollars.
yeah, beautiful association, but trees are expensive, unfortunately.
I think, I mean, I think looking at the Davis Sterling Act, it's supposed to be an operating expense. So I think I think that it's important. I think a lot of times when expenses come out of reserves, homeowners don't realize the costs. And so in an attempt to be transparent, I think it's really important for that realization to be there. I really support operating costs being like tree trimming being in operating costs.
Yeah, and that's definitely something that we can look at come budget season, which
Okay.
is right around the corner here. We'll be here before we know it.
Yeah.
We can definitely look. I mean, it's going to be kind of a trade-off from, you know, a reduction in your reserve contribution to a larger contribution in your operating account. So it's definitely something that we can look at when we do the budget and how the board would like to kind of allocate those expenses, whether it's operating reserves. We can do either.
This is a really interesting discussion, and I think it needs its own time to talk about this. And just to give us a little time to examine the pros and cons and think about the history of that. So it won't be something that we're jumping right into, but I think we need to make a reasoned recommendation to the board for, you know, making a change like that. Maybe shall we put it on the agenda for next month? We're gonna have a hefty agenda next month.
Thanks,
team, but
Susan.
that's okay.
Susan, are we going to have a meeting with Browning where he's present so we can discuss some of these things?
We usually do, Peter. Thanks. That's a great question. And it's usually maybe Betsy, you can speak to that because you remember, you know, that you've scheduled those meetings with Browning.
Yeah, I have actually already contacted him for preparing a update for the year. The board will look at the proposal for that, and then hopefully we can have him at next month's finance committee if that's what the board would like to do.
I don't know if, you know, I didn't mention it, but I was chairman of the finance committee about 20 years ago, and Browning was doing our reserve studies back then. So he's been with us for a long time.
And he hasn't aged an inch. It's just really ridiculous, but
Yeah.
no, he's really great.
Yeah, Bob's really good.
Okay, Jim, back to you.
Right. All right, so this is our income statement. Do we have any questions on the income statement right now? All right. So the next report is going to be our 12-month income statement. So basically, you know, the last 12 months of expenses rolling forward. So this kind of gives you an idea from a trend standpoint. Also good if, you know, if you're trying to figure out, you know, why landscape bills super high this month, it might be because we, you know, missed the previous month. But this is a good report, just kind of give you an idea of trends. You know, this is also a really good report to take a look at when we sit down and do the budget as well. Kind of gives you a little bit of historical overview of what's, you know, happened over the last 12 months in each of your GLs. Right. Our next report is going to be our sub-account general ledger. So the sub-account general ledger is basically all of the activity from your operating account. So this is going to be kind of a detail of all the different transactions. So all the checks that were paid out, all of the income that came in, any kind of journal entries that hit the operating account are going to be shown on this report. So up here at the top, the ECKs are all of the checks. So these are all going to be the checks that came out during the month. Down here, we've got journal entries. So that's going to be generally what you'll see is whenever we're moving money for reserve expenses out of a reserve account into operating, you'll see that as over here with the JE reference. The JERs are reoccurring journal entries. So that's going to be generally your reserve funding every month. And then down below that, we've got our RCP. So that's going to be receipts for payments that have been received by the bank. So it's going to be all the homeowner payments. And then all of these different types of payments are all just the different ways that homeowners can make their payments, whether it's through ACH or credit card, or sending in a physical check.
So these are all just homeowner payments to the association.
Correct. Yeah. All these RCPs here are going to be all the payments that came in during the month. The RM cash process post are going to be when we, for the most part, that's when we receive like a physical check down in our corporate office. But all the other ones are, for the most part, just the click pay digital payments that we receive. Right. And then very bottom here, we've got the RRPs, which are going to be refunds. So those are just going to be homeowner refunds for anybody that might be moving out or they made an extra payment. For the most part, they're move out refunds. So those are down here at the bottom. And then we've got our totals. And then right here, the 2110 reserve funds and checking. So anytime we have reserve funds that are in the operating account, we keep those separated so that there's no commingling of funds. So right now we've got $16,000 in there, and it looks like those are going to be for, let's see, pending REA. Actually, that looks like account balance to 0. So it looks like those were reserve funds that were moved in, and we were waiting for a payment to be made for reserve expense, and those got paid out. So we're now at a 0 balance.
So Jim, where are the checks or the payments from the reserve account? Where do those show up?
So all of the reserve payments come out of your operating account. So kind of the reserve expense flow would be there's an REA, which is a reserve expense authorization, gets signed by 2 board members. And once that's signed, that goes to our banking team. The banking team then transfers the funds for that reserve expense out of a reserve account and into your operating account. And then the payment for the reserve expense gets paid out of your checking account. And the reason why we do that is because you're limited to 6 withdrawals out of a money market account every year or every month, or you go over that. And then if you go over that amount, it'll eventually get, I think it's a regulation D notice. And if you get 2 or 3 of those, the account gets changed into a checking account that you don't get to earn any interest off of. So that's why we do all the payments out of the operating account.
So all payments that we make, both reserve and operating, are out of the operating account.
Correct, yes. Yeah.
Okay.
Any questions here on the sub-account report? All right. Our next report is going to be our general ledger. So the general ledger is just a long report of all the transactions that happened during the month. So if you ever have a question as far as what happened in a specific account, general ledger will give you all that information in detail. So it's the longest report we have, but it does give you all of that background information if there's anything that you need to look into. This is the best report to kind of take a look at that and get the detail for all of the transaction history. Ledger. All right, so the next report is the GL transaction register. And this is a listing of all the journal entries that have been posted during the month. We just include this for transparency reasons, so you can see all of the manual entries that we've done. For the most part, it's going to be cash transfers, recording interest. If there's any kind of expense recodes we need to do, all of that will show up here on this report. Yeah, so this kind of gives you just the detail of all the journal entries. There's just some things that don't necessarily flow through our accounts receivable or accounts payable processes, and those all need to be manually posted with the journal entries. So that's what we're showing here. Having multiple journal entries every month does not mean there's anything wrong with the association or that there was any problems or anything like that. It's just there's some transactions that need to get posted with a journal entry rather than going through our accounts receivable or accounts payable processes. Any questions on the GL transaction register? All right. Our next report is going to be your receipt statement. So this is going to be kind of the overall view of your accounts receivable. Up here at the top, we've got our miscellaneous income. So this is going to be anything that's not assessment related that's come in through the month. You know, we've got the clubhouse rentals, keys and things like that, Comcast. So just different non-assessment revenue.
Right now, some of what this is, you see these larger check amounts. We have been collecting funds for a playground fundraiser, part of the Campus Commons playground. And once we're ready to present that money with them, it'll draw from the same GL, I believe. Is that right, Jim?
Yeah,
Or would it be
yeah, it's
different?
probably, yeah, I'm guessing it's probably going to be this miscellaneous revenue for the
Yeah.
for these amounts.
Yeah.
So, yep. So when we do that payment, we'll cut it out of the 14,132.
Yeah, it's just basically like holding in there until we're ready to give them the donation.
Oh, that's nice.
Yeah.
Yeah. Right. And then, so down below here, then we've got all of the owner assessments. So up here at the top, we've got our beginning balance. So at the beginning of June, we had 46,626 in outstanding assessments. And we had a prepaid balance. The negative here represents prepaid. And that was a prepaid balance of 64,085. The 322,730 is going to be your monthly assessment billing. So these are going to be all of the billings that were done during the month. So we billed $3,990 for CC&R violations. We had a $35 return payment fee. So that's what this column here represents.
Wait, I'm a little sorry, can you go back up? I'm a little
Yes.
confused with the prepaid. Can you describe that 01? Yeah, up there.
Yeah, so 01, yeah. So the top number here, the positive number is going to be your accounts receivable for assessments at the beginning of the month. And then the negative here is going to be your prepaid balance at the beginning of the month. And then our second column is going to be our billing. The third column here, where we've got the $5.90, that's going to be adjustments. So that's going to be our AR team. And generally what those are is when we're moving money on homeowners' accounts to pay off some kind of other balance. So for the most part, what you'll see is you'll assessment here and then the private street down here. And then the interest and late fees. Basically, it's AR adjustments where they're just kind of, you know, moving funds around for the owners to kind of get everything into the right type of charge. And then in our fourth column here, we've got our payments. So this is going to be the actual money that has come into the association for all the different homeowner payments. So we received $330,744.50 all together in payments for the month. And then we have our ending balance. So our ending balance dropped down to 46,000 receivable, and we've got a $68,000 prepaid. So the 46,000 and the negative 68,359, you'll see those numbers over on this side in the column 1 for your July financials. So overall, you know, $46,000 assessment receivable balance is really good. So you guys should be very happy with that overall. Yeah. Any questions on your accounts receivable? Right. Our next report is going to be our GL disbursement report. This report's nice because it gives you some more details as far as what the expenses are for. So this is where Betsy's able to put in kind of a little, you know, a little bit more information. You get the utility bills. So down here is kind of where this report's kind of good. It'll give you kind of more detail as far as what those actual expenses are for. Over here on the far left side is the GL that those expenses were coded to. So one thing about this report is if we do recode an expense, it doesn't necessarily show up on this report under the new GL. It's going to show under the original GL that it was coded under. So if we do make any adjustments, or if you're taking a look at this report as a, an example, 16022, if our overall account total for the month doesn't match up to this $1,000, it's generally because there was a recoded expense. But for the most part, I would say 99% of your expenses are probably going to accurately report on this report. And this kind of gives you just the detail for what each expense was. And if there are any questions on, how did we, come up with $3,537.33 in community events programs? What did we spend it all on? This is going to be the report. The GL disbursements report is going to be the go-to report to kind of get that detail for the individual expenses.
I have a question for Betsy. What the hell is a mystery machine? I went through this and I understand the rest of it, but what's a mystery machine?
Mystery Machine is just the name of the company that does our website maintenance. They're the ones that got it back up and running when it went down last week. That's just their company name.
I mean, I think I could understand the rest of it, but I thought, wait a minute, what's a mystery machine?
But I always thought it was a weird name too, but if you think about it, it's the perfect name, because what's more confusing than making websites work? What's more mysterious?
Zoom is more confusing, but that's all right.
Yeah. That's
Did
what
we
that is.
find out who did the glass and the soap, and do we have their key cards?
No, it was homeless people, unfortunately.
Oh,
Yeah.
okay.
Yeah,
Yeah.
that cleanup.
That
mhm.
makes sense.
And so that's the GL disbursements report. Any questions on this report? All right. And our last report here is going to be our AP check history report. So this one just kind of gives you a listing of all the checks cut during the month in chronological order. So it gives you the check number up here in the top left, our vendor code, which is just kind of what we use for our internal AP processes. And then you've got the vendor name here, so City of Sacramento. And then there might be multiple invoices paid on each check. So if there's multiple invoices, those will all be listed here. And then on the far right side, we've got our total amount of each check reported there. There's a few different types of payment methods that we use. So you'll see the Ds. So a D is going to be usually for utilities that are on ACH, and it's a direct payment. So there's no actual check cut for those. Sacramento Municipal will come in and do the ACH out of the account on a monthly basis. So when they do their ACH, it will clear these checks. Down here, we've got W's. So W is going to be withdrawal. So those are going to be all the payments that we process through Avid. And Avid is all of the W's, and then they've got multiple payment methods that they use. So you can have virtual credit cards, they can have physical checks cut, all sorts of different payment methods, ACHs. And then there's one
Abbott?
more. Oh, go ahead.
What's Abbott?
Avid is our AP system that we use. So it's an online portal that Betsy goes into, and what they do is they scan and upload all of the association invoices, and then yeah. So
Wow.
then Betsy goes in there and she'll see the image of the invoice, and usually it pre-populates. What it does is it uses form fields to identify the vendor, identify the invoice number, and then it checks those against a database. So if a vendor is not connected to your association, then what happens is it'll get kicked out and go to manual review. So somebody off the street can't just send Nepenthe an invoice and say, hey, send me $1,000. What's going to happen is it's going to go and it's going to get read, and they're going to say, hey, we don't recognize this vendor, and then it gets kicked out, and Betsy may never even see that invoice in the long run. So, but then they also have checks in there for any kind of duplicate invoices. So it does an invoice scan and checks the invoice number against previously paid invoices to eliminate double payments. So yeah, it's a good program, and I think for the most part it's been pretty successful. We haven't had any issues that I've ever heard about. So yeah, overall they do a good job. And then so here's the last different type of payment method, and it's going to be a C. So that's where we send an actual checkout in the mail. And I would say probably 90% of the physical checks that we send out are for homeowners that are moving out and are getting a refund. Yeah, but for the most part, I think most of our vendors work with Avid to process payments through them, mostly electronically. So it just speeds up everything, and it's a little bit more secure than physical checks going out in the mail. So,
Does anybody want to know who Morgan Fussell is?
I was wondering, but it
Okay,
seems like I know.
it's,
Oh, no.
that's our easement agreement. So in exchange for brokering our agreement with Comcast, he makes a commission, a percentage of that money that we get, that revenue sharing is his commission. So that's who Morgan
Oh,
Fussell
okay.
yeah, so I think you'll see that payment coming in here. Yeah, so here's the easement agreement. So on the receipt statement, that's where you can see this one, that payment coming in. So that's going to be the Comcast easement agreement coming in. So you guys got $6,853.42 in June for that, and then
Is that a quarterly? Do we get that quarterly or monthly?
I
That-
wish it were monthly. No,
I was gonna
it
say
is-
it's like-
it is quarterly.
Okay, and then yeah, Mary told me she has AT&T, but I thought it was just Comcast over.
We used to have revenue sharing with AT&T as well. And then during the last go round, when our term expired, they they elected not to do that. And
Okay.
so the board at the time voted to kind of make them dark. In other words, if they didn't want to pay for access to the underground and access to the utilities, then they would not be permitted to do business here. Obviously, people who still had AT&T can
Okay.
continue to have it.
Thank you.
Mhm.
and the very last report that we've got here are going to be all of the bank statements. So this is just a list of all of your accounts and the bank statements. You guys got quite a few accounts altogether. Yeah, and as interest rates go up, we can always provide some additional analysis for your accounts to see, some of them might be, paying a pretty good interest rate, and some of them may, there might be some opportunities to increase the interest rates on those. So, especially as the Fed increases their interest rates and the banks reset their interest rates, we can definitely take a look at, trying to maximize the interest income for the association. Nice. So that's kind of a brief overview of the overall financial packet. Does anybody have any questions or any items that you guys want to go over in more detail?
I learned lots of new things. So thanks.
Yeah. And then, so once we get the reserve tracker updated, the reserve fund schedule updated and allocated out, I'd definitely be more than happy to jump on another call and kind of go over those changes and have another meeting. And if anything comes up, be happy to go over it with you guys.
I think that would be great, Jim.
Yeah,
And
thank you.
the only thing I'd add to that list is I think that there's some folks wanting the Excel spreadsheet, like to be able to see the items that are going into the reserve tracker instead of just getting a PDF.
Okay.
And I think we just limit it to the board and this committee.
Okay, perfect. Yeah. Once we get that report updated to tie out to everything, Yeah, I'll work with Betsy, and I think that's definitely something that we should be able to share with the committee and the board.
Oh, that'd be great. Well, I think, and if nobody has any other questions, I think we really appreciate everything that you've told us today. And if you look in the chat, you'll see other people thanking you for your time. I really appreciate your coming and being on the call.
Yeah,
Thank
thank
you,
you
Jim.
guys for having me. Yeah, glad to share some knowledge and answer some questions. And yeah, like I said, we'll probably work on getting everything cleaned up from the reserve side of stuff. Probably, I would say probably early next week at the latest. And then we can send out some updated reports and look at scheduling another meeting.
Great. Thank you. Well, just going back to our agenda, I feel as though we have gone through the financials pretty well and the reserves, although without much analysis. Betsy, do you want to give us an update on what's going on with the financials? And of course, Ashley, I know you've been looking at these things too. So if you have anything you want to contribute, we'd be happy to hear that.
Oh, sure. Thanks, Susan. I'll let Betsy go first because some of the information might help me.
Well, actually, I feel like we did just go through the financials with
Okay.
Jim there. So I feel like he's given it all to you. So unless you have some question that wasn't covered, and I hope I've got the answer to, he's the smart one in the room for sure.
I was just thinking of any kind of like high level updates, expenses, what's going on.
Not at the moment, no.
Operations, everything is just kind of smooth and.
Yeah, I do have the contracts ready for John's signature for the phase 1 siding repairs, siding and fencing repairs, and the oh, I don't think I have control of the screen. Okay. Yeah, so yeah, I don't oh, and the painting. So that's really it for now. I'm working on board packets for next week. It's already time for that. It's a short turnaround this month.
Betsy,
Yes,
where do we stand on the water bills? Have we yet to get?
we have, okay, yeah, we have not gotten anything. I have to follow up with the city. I will, I'm playing around with the budget for next year already. And I mean, based on the information they have provided us, it really is looking, I hate to say it, knock wood, that it really is going to pencil out to be $70 per unit per month for the water, which I think for most homeowners is right about what they're paying the city.
Okay, the only question I have is if they haven't gotten us what they guaranteed us, is there any option for delay of, the billing cycle?
Yeah, that's definitely the question, and that is what John has tasked me with finding out, or
Okay.
at least approaching.
Fine, as long as somebody's taking care of it, that's fine.
Yeah. John brought that up at the last board meeting, and that is where I'm starting my conversation with them. But I still feel like I want to get it in the budget, at least, even if it's only for, half that amount for half the year or something. But we need to probably be a little realistic and put
Right.
something in there.
Yeah, that, and can you just clarify, when we do start paying water bills, are we still going to get our individual water bills from the city?
You will not. So it really becomes a wash. You'll stop getting a water bill from the city, but your dues will be that much higher. So I anticipate that there will be, some gnashing of the teeth and wailing from folks that, see that increase, and we just have to really make it clear it's a wash. They're gonna get rid of one bill, but it's gonna show up here.
That water bill though also contains what, the storm drain assessment?
I think they might, and that's another question that I have to ask, because if are they gonna get, are you homeowners going to get a bill for that? For storm?
I suspect we are, that they'll cut the water bill, but not the.
Mhm.
the
That
flood.
was always my thought too, but I can certainly.
So when we're calculating, we have to take that, the
Mhm.
balance, we need to take that into account.
Yes, good point.
Well, so you're going to follow up on that, Betsy?
Yes.
Okay. Ashley?
Okay, all right. So can you see my screen?
Yes, ma'am.
Okay, so just, we went through a lot of the things. I asked a lot of the questions, but just, I just put this together. This is just a little bit about me. I was the lead accounting analyst on the Board of Equalization's mold remediation project, which, there was a lot of, I don't know, I'd say I am kind of a forensic accountant to some degree, but I'm not a formally trained accountant. I have a master's of finance, undergrad in finance, but I've done a lot of additional coursework in accounting. So just going forward, just some of the goals I think that we should have, although I'm not speaking on behalf of the board, this is just sort of me, what I see. Just some clarity in reporting. I think what Jim is doing is really going to help. I'd like to see us improve some of the accounting controls, compliance and Davis Sterling reporting requirements, include the finance committee and more of the financial decisions, including invoice review. There have been some invoicing issues, which we can save for another time, or I should say work order, I'm not sure. Business process improvements, I think you guys can be a good resource for us. There have been some issues with the spending authority clarification that I'm hoping the board can get back to you guys on. And then I really appreciate that kind of forward thinking, like you guys did, like Will did on the siding, and being willing to look at the solar and those kind of projects. I really appreciate that. So just here's a little blurb on the Davis Sterling as far as talking about repair versus, sort of the ongoing expenses, but that's where that comes from, is right here. And I think we should follow that. I know we're going to talk about that. The tree trimming being part of the operating expenses. Just some suggestions I'd like to see happen. A policy, something like completed projects, work orders need to be invoiced and paid within 30 days of completion. Track management versus board approved spending, as well as tracking maybe homeowner requests. I think to get ahead of inflation, we're going to have to be, I'm not sure what the numbers are coming in like on the paint and the siding, but it's just going to get worse and worse. I know we're going to be spending a little bit more, so I'm hoping to get some insight from the finance committee with that and make suggestions on where we need to maybe trim back for the year. We talked about the included column for committed spending in the reserve tracker. And I said fund tracker here, I meant reserve, overhaul the reserve tracker, which seems like Jim's working on. I already went over that, but basically I talked about these things, but just looking at inflation, where can we maybe find savings? Looking at some of the invoices to see if they were authorized. How can we improve accounting controls? How can the work order process be improved? Maybe have a work group with the grounds committee members to fine tune that budget and create a more real-time look at the available funding so that they know how much they have and which projects can be put off. How can we better track board versus management spending? because they are, management's, they're dealing with a lot of things real time that they have to be responsive to. But, I think it's also good for us as board members to figure out what we're spending. And that's it. So I look forward to working with you guys. And if there's anything you have for me that you'd like me to bring back, I certainly want to be open to that. And look forward to your feedback.
Thank you, Ashley. And I'm, now might be a really good time. And just FYI, we are recording this, so we have a record of your PowerPoint. But maybe it would be good if you could just send it around to the committee members anyway. But it might be a good time to bring up what I wrote to you in my email. And that is that, well, a lot of the kinds of things that you're talking about need to be kind of discussed at the board level and then kind of come down as direction. And we can certainly, if need be, evaluate some of the kinds of things that you're suggesting, tree trimming, for example. We can kind of look around in Sacramento and see what different HOAs are doing and kind of just look at the pros and cons. So then you as a board can make a decision about that. But just in terms of whether to, the finance charter says that the treasurer should be our liaison to the board, the finance committee's liaison to the board. And, everybody has seen how helpful Ashley can be as a board member. And, she has knowledge in accounting areas that are really helpful to us. And by saying all this about how we should have the treasurer as our board liaison, I don't want to take anything away from you, Ashley.
Yeah, I was supposed to be a board liaison last year. And
I know. But, for a lot of reasons, it's a really great idea to have the treasurer be the person that's completely, devoted to issues of the finance committee. And that doesn't mean that you can't continue to, kind of promote your ideas and ask the finance committee to review things that you propose, work with the treasurer to, to further those things, because you're, after all, the vice president. And so you have like that higher level of responsibility to the HOA in addition to everything having to do.
Well, I don't really have that much. John's doing everything. So,
well,
it's an area where I'm better at. And Jackie she's worked with corporate, insurance she's got the expertise, the business risk and all of that for ILS, which I think would be a good, I'm not saying that I shouldn't, it would have been helpful had I been the treasurer, been the board liaison last year. I don't know. I get asked to go to meetings and then I get told not to go. I never know from one day to the next. So this was decided, and until that changes in board session, I'm your liaison.
Exactly.
I really want to say I really support Ashley. I was on the board where the members.
Mary, no, I really don't want to get into
Well, you brought it up, though, so why don't you?
No, I'm just saying that I also really admire Ashley, and really it's just a question of following the finance charter or not and trusting the process. And that's a decision that the board makes, not us. But, they made the decision for me to be the liaison, so I'm sticking with that for now. Oh, and as we are, and that's what the decision is until, we write the notes and say, by the way, the finance charter says this. And I don't know what's involved in changing the charter. That'll be something for you all to decide. But, I think your idea about working more closely with grounds, for example, is something that's nice, but it takes away from finance committee issues. And it might be
I don't know, that's for you guys to maybe it was just a suggestion. Maybe there's an opportunity for it. I'm not married to anything, but I'm just saying that I think that there are, that there might be some talent amongst the group that could be helpful if,
Well, I think
Um,
that, you're talking about a group of volunteers, and, you also have a talented group in grounds committee that probably wants to make some of their decisions too. So I wouldn't want to get in the way of decisions that they really need to make by second guessing them when they've, they have access to the accounts and finances too.
Yeah.
And, but you're certainly right. There needs to be a lot more coordination, and grounds needs to really kind of understand how much money they have allocated
Yeah.
to
I don't
activities.
think the numbers we're giving them are quite what they need to be, because there's, if there's lagging invoices or something, then it just throws everything off, that they think they have more, and no one's fault really. I mean, it's just,
Well,
how
I
it
think
is.
this is something where you as a vice president could have some involvement in both committees. And, we would play our part and grounds would play their part. And, there's some oversight required as a vice president. I'm sure that each vice president has their own specialties and kind of develops their role for themselves on the board. But
I would just like to step in. I was
Kara-
vice
Kara-
president and I had nothing to do, just like Ashley. So.
Yeah, I haven't been given any
Very-
special powers,
there
just so
isn't
you know, Susan.
Yeah.
well, that would be.
So John's
definitely
got the
something to-
keys
to
and
take. Yeah, I think that's a great discussion to have on the board. And Mary, I'm so sorry to hear that, because it's very disempowering feeling like you don't have a role.
It wasn't
yeah, and
just-
as a treasurer, I didn't have any either, but that's.
Sarah,
I don't-
would
I
you
don't
like to
need
say
to be-
something?
Oh,
I'm not trying to, I'm acknowledging your comment, Mary. Sarah?
Yeah, I just want to also clarify. So it sounds like Ashley has a lot of great ideas on, especially if she talks about controls and reviewing invoices. But I think I just need to understand, because I guess I'm confused. It sounds like there's a lot of, so Susan is our chair of our committee, and my understanding is that the board liaison was really just to kind of help the committee understand the board's recommendations and decisions, and then help with the committee's needs, concerns, and recommendations to the board. So just that true liaison, not necessarily driving. So I guess my question to Ashley is, those goals that you have on there, were those, is that representative of the board? I guess that's maybe a question. to
Not
Dawn.
necessarily, but I think that, not to go into detail, but there's certain findings that are a problem, and we haven't had the opportunity as board members to discuss it yet, and I am not speaking on behalf of the board, but I can just tell you that I think some changes need to be made. That's all I'll say right now. But
I just want, and sorry, I just want to make sure that we're very defined on where we're focusing the energy. So although you do say that there are some accounting controls that need to get changed, I would definitely like to understand where you identified those gaps. And so maybe we can figure out, cost benefit, and then make a recommendation to the board. Like, does it really lie within First Service corporate headquarters?
Yeah.
Or is it something that's within local control? And does the board need to engage an independent entity? Because this is not what our area of expertise is.
Yeah. Well, I'd appreciate, I'd be more than happy to spend time with you and kind of show you the sort of issues.
I've also kind of just raised the issue that typically the board liaison doesn't have a really active role in discussions.
Well, they do in the landscaping committee. Cheryl does.
Well, not so much in our committee. It's more of a resource person. That's not to say that we can't adjust, but it just, it bears some thinking about what really works best for the board. and for moving committee issues forward.
Well, I have a fiduciary duty to 590 homeowners, and if I see things that need to be improved that are putting us at financial risk, I need to, do something about it. I can't, whether I'm a board liaison or what, but I mean, this does seem like a good fit for me. And,
Yeah.
I don't want to speak to it any more than that tonight.
No, it's really a discussion for you to take up with the board. In my minutes, I'll just point out that this is what the finance charter says. It isn't even at the level of our committee making a recommendation. It's just pointing out that, hey, these are the rules, and you all have to decide something about it. It's not up to us. Clearly you have a lot of support here. In my email that everybody saw, you can see my arguments for having the treasurer to be the board liaison. And, quite frankly, whatever you decide as a board is going to be fine with us. So I just want to, and I think I have the agreement of the committee on that, don't I? Because I know that I know Peter has spoken of.
Yeah. Could I just make another comment, please, Susan?
Absolutely.
Okay, thank you. I'm not sure that the board or the committee charter has any legal standing, but regardless of that fact, if we're so concerned that the treasurer should be the liaison to this committee, why don't we just request that the board, which has a total power point officers, and we're talking officers now, not board members, appoint Ashley as the new treasurer? Just switch the position.
Well, then I lose my vice president status.
Yeah, well, so what? It's not you, it's, being vice president under all of the rules, the CCNRs, the bylaws, gets you nothing, And if it's important that you be the liaison and that the treasurer be the liaison, let's request the board make that change.
Well, thank you, Peter. That's another option on the board that the board
Make that
talk about.
recommendation as a homeowner to the board.
Well, and I think that Ashley probably has some thoughts about that, but it's really their decision. I just want to say.
But based on your concerns, I will raise that recommendation to the board at a board meeting.
Well, I'm also fascinated. John was the liaison last year as the president, and none of this came up last year. So why is it coming up this year?
Because we now took a look at the charter as we brought our new committee into being. And, that's the way things happen sometimes, Mary.
So the charter was in existence last year,
The
right?
charter was definitely in existence, but we just all kind of went merrily on without looking at it. And it's, one of those things that can happen. And then all of a sudden you go, oh, we have these things like standards and practices, and we have a charter. Let's take a look at this. And so
where did
that's
the charter even come from?
This is a discussion for the board, not for
It
this
really
committee.
is, I
This
know.
committee's got a mission. And we ought to stick with that mission and let the board make these policy decisions. They're the policy entity, we're not.
Thank you, Will. And I do want to be mindful of the time because it is after 6 and we've had you since 4:30, and we usually try and keep our meetings to about an hour so that we're very disciplined in getting through our agenda. But today we had a special treat of having Jim go through the finances with us. So I would really like to kind of leave it there. I'm much appreciative of everybody's contribution and voices, and appreciate that you feel comfortable enough to say what you think. That being said, I think it's time to adjourn for the day. And but before we do that, I just want to check on next meeting dates. We are scheduled as the 4th Monday of the month. And that puts us, our next meeting at the 22nd of August. Is that good for people? I have to say, I'm going to be in Baltimore, so I will be joining remotely. But I will join if it's good for everybody else. Okay, all right. Done. Well, again, thank you, everybody. It's going to be a treat working with you all. And I think we're going to have a really great and productive year. See you later.
Thank you.
Great
Bye.
meeting everybody. All right, bye-bye.